Welcome out to the 4th episode of the Upland Show. I'm Loyal Doyle here with McSqueeb, and we're excited. We got an exciting episode today. We're excited to share with you some research we've put together that we feel will be beneficial and could be really helpful on your outlook of what's going on with crypto right now. Is it a scary time to be investing? Is it a good time to be investing? Should you be putting your money in NFTs? What's going on?
Yeah, everyone's right now is kind of losing their mind. They're thinking either A, crypto's dead, B, we're starting a really scary or entering into a really scary bear market, or C, this is a great time to accumulate tokens or coins. So yeah, it's a interesting time right now. I think everyone's asking the questions, what is next? And so, I don't think it's the scope of this podcast or this episode for us to dive deep into crypto, coins, or currency specifically, but we do want to talk about the role that the metaverse plays in your portfolio, or that can play in your portfolio. Especially as we enter into these bearish cycles in the market, and how can you make money with the metaverse? And so stay tuned, because we're going to be talking about some things that are very important to you about how the metaverse, specifically Upland, will help you to strengthen your portfolio, even when we hit these bear cycles.
Yeah. This week, though, there's a bunch of news, as always. Upland is constantly dropping new updates, new content. The Hyperloop is here, and Cleveland is dropping. At the time we're filming this podcast, Cleveland is dropping tomorrow morning. Bearing we don't run into any technical issues, but man, the last Chicago ran so smooth and no issues. So I've got high hopes that Cleveland's gonna run super smooth, no issues. And but this Hyperloop announcement is super cool. And did you have a chance to actually ride on the Hyperloop in game?
I did. Yeah. So as Loyal Doyle mentioned, Cleveland is the next city to be released, and to get from Chicago, if your avatar is in Chicago, to get to Chicago, the fastest way is there's two ways: either the typical train, which takes you about an hour to get there, right?
50 minutes in game.
50 minutes, and it's how much UPX, I guess?
It's 300 UPX, I believe.
300. I think it's 40 UPX. Isn't it? It's pretty low, but with the...
Well, I remember one being double. I believe it was around... One was either 150 and 300. One was either 300 and 600.
So I just sent my little avatar guy from Chicago to Cleveland, and I used the Hyperloop. It cost me 375 UPX, I noticed.
Oh, okay.
Yeah.
So I think it was only 150 UPX for the for the regular train.
Okay,
around there.
And so that's 50 minutes versus 5 minutes.
Yeah.
Okay, cool. Yeah, right on.
So the Hyperloop, man, gets you there fast. And we've been doing a little bit of research on Hyperloop. Awesome technology. I didn't actually see top speeds or anything like that. It looks like 760 miles per hour.
That's insane.
And here, let me zoom in on this a little bit. For those of you watching on YouTube, we're showing some stuff on the screen here. It looks like the team from Tesla and SpaceX. I don't know if that means Elon Musk is actually over Hyperloop, but it looks like at least the team who was working on Tesla and SpaceX is designing Hyperloop, which is super cool.
Yeah, certainly. If you're the CEO of Tesla and you're the CEO of SpaceX, I'm sure that you are very familiar with whatever subsidiary that you are investing in. And so certainly Elon Musk, clearly knows all about the Hyperloop. And the fact that Hyperloop and Upland have come together in a joint venture is actually quite groundbreaking on several levels. Number one, we talked a couple episodes ago about the future of Upland and how Upland is going to be partnering with multiple third-party businesses to be found within and sell and go to market within Upland. Well, this is the first instance of that. So that's the importance, or that's the significance of this venture.
Exactly.
Number one.
It's like cutting the red tape on the first of many awesome partnerships.
Yeah. And
Dude,
then go ahead.
Sorry, side tangent. Look how cool this like doesn't this here right here it's gonna show like the city view. Doesn't this look kinda like what the future of Upland will probably look like, just futuristic, cool, like
For
this
sure.
is awesome, man.
Yeah, for sure. So the second thing that's really cool about it is that maybe not directly, but at least indirectly, Elon Musk is now to some degree a partner with Upland, right?
Dude, it's crazy to even think about that. But
And we all know
seriously.
that Elon Musk likes to hype things with his Twitter feeds. So hopefully he'll be tweeting about Upland soon.
Absolutely. So today we actually have a presentation that we prepared. Vince prepared an awesome presentation that we want to share with you, and give you some of our thoughts on, this kind of fear that's going around in the media. Should you be scared? Is all crypto going down? Is it time to get out, or is it a good time to get in?
Yeah.
Let's do you want to jump right into the presentation right now?
Yeah, sure. That sounds good.
Cool. Let me share the screen, and here we go.
Okay, first of all, I do want to give some credit to a few different content providers that I have drawn upon to create this presentation. Those two channels are Investing Made Simple and Coin Bureau. If you are involved at all in investing or in the crypto market, you will probably know of these two channels. And so they helped me to provide, or actually helped me to kind of put together these thoughts. So I would recommend you go and visit these channels. Okay, so having said that, let me get back to a couple of thoughts here. Number one, yeah, a lot of people right now are kind of losing their minds about crypto. So as we mentioned earlier, the question is, where is crypto heading? Is it dead? Are we entering into a full-on established bear market, or is this an accumulation time? I think the jury is out on that, but I think the majority of experts in the industry are saying that this is just a good time for you to accumulate wealth or to accumulate coins or crypto, because this might be a bearish cycle, but is not necessarily a bearish market at this point, or a bear market. So now, having said that, though, this is a time in which a lot of folks are seeing their portfolio decrease significantly. And the question is, what do we do during these times when either A, we are in a bearish cycle, or B, we are entering into a bear market? So I kind of want to talk a little bit about that and what that means and how that specifically may impact your involvement with Upland or the metaverse. Okay. So with this slide here, we see here, this is just a typical diagram of the various stages of individual investment. Okay. So obviously the very first stage you see on the left is the growth stage. This is when you in your 20s or 30s, ideally, are accumulating wealth. This is when you are defining what your investment strategy will be. You're looking at the various options available to you. You're understanding what your goals are, and you are investing accordingly. So this is the accumulation time. Now, when you hit into your 40s through 60s, that's when you are in the prepare stage, meaning you're preparing for retirement. Ideally, it means that you are preserving your wealth. You're still increasing, but you're preserving, really. It's not as dramatic. You're not...
you're definitely taking less risks at that moment
right.
of time,
You're
right?
starting to kind of maybe do more conservative investing. So really, you're just preserving what you've done in the growth stage while hoping to still make returns so that when you're hitting the retirement stage, you're good to go. So in the retirement stage, obviously that's the time in which you are taking the wealth that you've earned through the growth and prepare stage. You are now enjoying that time, but you're also making decisions about how you're going to distribute the wealth that you've accumulated to those within your circle of influence or your descendants.
Yeah, and if you look at the graph, I definitely think it kind of good financial advice I received in my finance class in college is like you're generally taking more risk. Like in the accumulation phase, you're doing more risky investments, right? And then by the time you get to like the retirement age, you're wanting to just make sure you have your needs met for the rest of your life. So that's where you will take less risk with your funds, right? Maybe more bonds and less, high value stocks or that could be more volatile or whatever.
Absolutely. Yep. Okay. So, here, this is kind of an interesting graph. Okay. So this is a distribution of the various generations within the United States. So we have the total U.S. population by age in the year 2020. So we can see here that on the far left, you have the Gen Z generation, which are all people born between 2000 and 2020. There's 86 million of those. Millennials born between 1982 to 1999, 82 million, just a little bit short. And then the Gen X. Whoop! How did that happen?
No, it's still.
That's weird. All right, so Gen X is about 65 million.
It's just like the browser doing it. It's not doing it on the...
Okay, all right, good to know. Okay, so then we have the Gen X group that is about 65 million. The baby boomers, 86 million. And then we have the older groups. Okay, so the baby boomers, what's important to note here is that they are in basically the preservation mode or stage of their investments. The Gen X and millennials are in the accumulation phase. So we talked about the growth stage. Primarily, most of the millennials and Gen X crowd are that orange and yellow right there are in the growth stage. So that's important to note. And it's an important backdrop because the majority of investors and followers of cryptocurrencies are, probably within the millennials or Gen X phase. So probably I think the average age is like around 38 or 40. I think that's starting to climb up actually. But at any rate, probably those of us who are in the metaverse are probably somewhere in the millennials or Gen X accumulation phase. Okay. So let's see. So the question really is, as we are in the accumulation phase for millennials and Gen X, what are our options for investing? Okay. So traditionally, all right, let's see. Sorry, there we go. So traditionally, we've all been told that the three main ways of investing your funds are into stocks, bonds, or real estate. There's commodities as well, and there's obviously always other things you can invest in.
Pokemon cards.
Pokemon cards, yeah, absolutely. But the three major categories traditionally have always been stocks, bonds, and real estate. Okay, so let's dive into each one of those and see what that might mean for those of us in the accumulation stage. Okay, so let's talk about bonds first. So this is the graph of showing the growth of the U.S. bond market from around the 1950s to 2010. And what we're seeing here is that in the last 10 or 15 years, the growth rate has been 1.5%. So 1.5%. What that means is over the course of 50 years, you can double your money. Okay, 50 years. So you invest everything into bonds, which are highly secure. It's very conservative, fairly risk-free. You can double your money in 50 years. Okay, not a great method for accumulating. If you're in the accumulation phase, again, which is the majority of millennials and Gen X generations, bonds are not going to be a great option for you to accumulate wealth. It's a great tool to preserve your wealth once you've obtained it. Okay.
So these graphs are showing the yield, or like the return that you get for investing in the same type of bond year over year.
Yes. That's correct. Yeah.
So the money that's being paid out was kind of at its peak, like in the 80s, and it's been dropping pretty drastically to the point where it pays out so little.
Yeah.
I mean,
last 15 years has been on average 1.5% annually.
Gosh.
So again,
that's fantastic.
Yeah, I mean, it's better than zero, right? I mean, it's better than just having it sit in your checking account, but or under your mattress. But at the same time, it's not a great asset to invest in if you want to accumulate wealth. And again, we're talking to the majority of the listeners to this podcast, or the majority of participants in the metaverse or the crypto currency market, are probably accumulators. Bonds are not a great option to accumulate. Okay, great option to preserve, but not a great option to accumulate. The second option, let's talk about the stock market. Okay, so looking at the stock market, here's the composite market value from 1950 to the present date. This is basically a snapshot of the Wilshire Index, which is basically the majority of most stocks in the United States. And as you can see here, we see a couple little peaks. There's a peak here around the year 2000, and then there's a peak here around 2008. So Tyler, do you remember what happened in around 2000?
I know 2008, but I don't know what the big. Oh yeah. This was like the fear of are you saying when we hit the year 2000, everyone was worried all the computers
you're
were
talking
gonna
about Y2K?
Yeah, Y2K
yeah.
or whatever.
No, maybe that had some to do with it, but this is considered right here, this peak around 2000 or 2001, maybe 2002, to be the dot-com bubble burst.
Oh, okay.
Right? So, right around 1995, 1996, people, that's when the internet really started and e-commerce really started becoming a thing, and everybody was jumping on the bandwagon. They're like, this is the new thing.
Yeah, then right there at 1995, you can see it really take off to the year 2000.
Yeah, so you have
big.
Amazon jumps in the game. You've got I remember cars.com, pets.com, all that kind of stuff started becoming a thing. And then around 2001, 2002,
these are really like the first e-commerce sites, pretty much, right?
Yeah. And so around 2001, 2002, there was the dot-com bubble burst, which another way of saying that is that the market was overvalued. And investor confidence fell, and the bubble burst, and it plunged, okay? Then it started to climb back up, and then in 2008 was the recession, right?
Yep, then it takes a massive drop.
It takes a massive drop. Everyone was depressed, and then it started to climb from there. And now look at us, okay? Look at where we're at in 2020.
Dude,
look at that spike.
That's like you've never seen a spike like that ever.
Yeah, that's insane, right? So now that all looks good. That all looks very promising. However, again, if you're an accumulator, if you're in the accumulation phase of your as an individual investor, where do you buy low so that you can sell high when you're jumping in to the market at this point? If you jumped into the market back in the late 80s, again, the baby boomers, if you were jumping into the market then, the gains that you had were phenomenal. At this point, if you look at the S&P 500, the average increase or gains over the course of the last 15 years with the S&P 500 has been about 10%, which is great. That is a super great return. But there's question now in the market of whether or not the S&P 500 can still continue to maintain that 10% growth from year to year, especially when we're spiking like right now.
Yeah, that is such a massive spike at the end, like we've never seen. And it makes me wonder, like, is a little bit of that, like, maybe stimulus money being pumped that people have some maybe extra cash that they're throwing into the stock? Because you said this is, like, pretty much the value of all of the stock market funds, essentially.
Correct, yeah. Yeah, so if we were overvalued in 2001 and we had a burst, and if we were overvalued in 2007, 2008, and we had a recession, well, are we over? You have to ask the question, to what degree are we overvalued now?
Yeah, for sure, at least a little bit.
Yeah.
Like if with a peak that high, but looks like we're constantly going up, though.
It's encouraging. You could make money. You will always still make money in the stock market over time. But the gains that have been experienced from the late 80s to now, I don't know that we will still continue to have that incredible amount of gains from like 1990 to 2020, the past 30 years. So the question is, yes, you can still make money in the stock market. I'm not trying to say you're not going to make money in the stock market. But what I am saying is the people who benefited most in the stock market over the past 30 years are the baby boomers. The baby boomers jumping in the late 80s or late 70s, and if they held on and continued to invest in the stock market between then and now, they've accumulated wealth. Okay?
Massive wealth.
Now, again, I'm talking about the Gen Z groups, or the millennials and the Gen X group or generations. We are in the accumulation phase. Is the stock market going to be a dramatic accumulation, investment for us? The question is, the questions are being asked, and many people are saying probably not. Okay, so you still make money, but not dramatic accumulation. Okay, now let's talk about
like good return, not maybe not like life changing.
Yeah, exactly,
or something like that.
Yeah, because again, if you're in the 80s and you're investing, you're probably one of the baby boomers, right? Yeah, and these are the discussion points I wanted to talk about. But yeah, 10% per year. Okay.
That's your average return.
Yeah.
Just in the stock market
Correct.
overall.
Yeah, correct.
Okay,
so let's talk about real estate. So real estate, this is where, again, the baby boomers had it easy. Baby boomers, maybe they're starting to buy houses in the late 60s, maybe early 70s, maybe late 70s or even early 80s. And they're doing it they're buying houses at $35,000 a year. Okay, this is the median sales price of houses sold in the United States from 1960 all the way up to the present day. And again, the baby boomers are coming in, they're buying houses for less than $40,000. And as they're holding on to their assets or their homes and their value is compounding over time, they're selling their houses, or they are living in these houses that are now valued at $350,000 to $360,000. Younger people coming into the market who want to invest in real estate have to join in at this rate here at $360,000 on average for a home price.
And especially the past 4 years, real estate has just exploded, like at a rate that seems, and you can see that spike there at the end. Like, look at that huge. That's you haven't really seen a spike like that in history of that most recent one there.
Yeah. So it's, again, all of these investments that we're talking about are still very valid investments. But what my point, though, is that the baby boomers are the ones who have enjoyed the dramatic gains over the stock market and real estate, that it's probable that the younger accumulation groups are not going to enjoy, because it's very, very difficult to get into this market at $360,000 average home price. It's super hard to get. It's a barrier. It's a barrier to entry for many investors, especially those in the millennials or Gen Zs or Gen Xs are just getting started. Okay, so what that means is, in summary, is that the Gen X and millennials got screwed. And what I mean by that is they've inherited an overpriced stock market. They've inherited inflated real estate prices. The other option is a pointless asset class, bonds. And I shouldn't say pointless. It's a great way to preserve your wealth, but not a great way to accumulate dramatic wealth. 1.5% is not going to help you out.
Yeah, definitely not.
So Gen X...
There's no real wealth. There's no life-changing wealth made there.
Yeah. So Gen X generation and millennials absolutely got screwed. Okay. Until crypto comes in. Crypto gets introduced into the market in its infancy around 2009, 2010. It's still just hovering over, between $0 and $1 at 2013. It has a massive spike here in 2018. And then here we are today with almost approaching $2 trillion in the global market of cryptocurrencies. Now, again, you might look at this and say, well, that's exactly the same shape and trend as the stock market. And you were just saying that the stock market is not a viable option to accumulate significant wealth.
Well, I mean, to be fair, the stock market was a little bit more, hasn't seen this much of a jump in the past.
Like, this is more vertical.
No. I actually probably, just because crypto's newer, that like we're pretty much starting at zero at the beginning, it probably makes it look a little more drastic,
Yeah. So in May of 2021, the global crypto market reached $2 trillion for the first time in history. Now it's around 1.3. I think it was 1.7 just like maybe 3 weeks ago, but now it's like 1.3. So it's definitely taken a definite drop. But yeah, you could say, well, gosh, the gains have already been made. So maybe maybe I'm too late as well. Well, let's take a look at this graph, this chart here. Global market. Let's compare the global market. So bonds, just under $140 trillion.
Jeez,
for
that's
bonds.
A lot of money.
Stocks, just like 105 trillion. Gold, about 12 trillion. Crypto, again, we're about 1.3 trillion right now. So you have to ask yourself, which of the global markets are going to be the is going to be the market that has the opportunity for 5x, 10x, 100x gains over the next 10 to 15 years?
Yeah, and I really think we'll see a lot more and more fall out of that bonds. I think we'll see bonds probably drop over time. I don't know.
Yeah, I don't know either.
That's massive speculation, but look how much. I think we'll see a little bit of a balancing effect happen here, where crypto will definitely go up and pull some money from stocks, gold, and bonds.
Agreed. But certainly, crypto is the opportunity of the decade. This is the opportunity for millennials and Gen X and the incoming Gen Zs to really experience the gains that the baby boomers enjoyed in the stock market during the late 80s to today, as well as the real estate market. Crypto is the future. It is the opportunity for the decade for those of us who are trying to accumulate wealth and not just preserve wealth. Honestly, if I was 65 years old and I had already accumulated my wealth and I just wanted to preserve it, I probably would not do much with crypto. It's volatile. It goes up like crazy. It goes down like freaking crazy, and people lose their minds. Like, I would not want to have, $5.6 million sitting in my portfolio and invest in crypto at age 65.
Yeah, and all like the traditional kind of very people who've studied the stock market all their life, like a lot of those people are very against crypto because of that, because it's unpredictable. You
Right.
can't. It's not a safe. Well, it's not. You can't plan your return like we've been able to do with so many years with the stock market. But again, that's what we were talking about earlier. You have to be willing to risk a certain amount. Real wealth is made when you take more risk is more earning potential.
Yeah. So Tyler, have you ever heard of Berkshire Hathaway?
I mean, yeah, I know the company or whatever.
So Berkshire Hathaway, there's two founders. One of them is Warren Buffett, and the other, I can't remember his name, but he's like Warren Buffett's, best buddy. And both those guys started Berkshire Hathaway. And so Warren Buffett, there's a great quote by Warren Buffett that says, the stock market, now I'm not talking about crypto, I'm talking about the stock market. This is what he said. The stock market is a great tool to transfer wealth, and I'm paraphrasing here. The stock market is a tool devised to transfer wealth from the impatient to the patient. And I think that applies to crypto as well. Now, his partner said something interesting as well when he said, and I'm trying to paraphrase this and try to remember it now, but he basically said, my goodness, I'm drawing a blank. What did he say?
Transfer. I'm still trying to figure out transfer money from the inpatient to the patient.
Well, so if you're impatient.
Okay.
If you're impatient and you see your money drop and you're like, oh my gosh, I just invested $10,000 into these various stocks, and it just took a dive, and you know what? I'm gonna hold. Everyone says to hold. I'm gonna hold. 3 months goes by, and you're checking your phone every day, and it's not going back up, and you're like 3 months has gone by, and you know what? You got to pay rent. Or you get, your car throws a rod and you got to buy a new car.
Yeah.
And you're like, oh my gosh, I guess I still have $4,000 left over from my $10,000 I left in there. I guess maybe it's going to go down even more. Maybe I'll lose the $4,000. So they pull it out. That's the impatient.
That makes a lot of sense. And then those who are patient and hold on to it.
Yeah.
The hodlers.
Yeah.
Are those?
They're the ones who are buying from these people who are jumping out. And they're like, all right, man.
Yeah,
you can be impatient. Yeah.
Sell high.
That's right. So it's a transfer from the impatient to the patient.
Yeah. That's a good quote. I like that one.
Yeah, I can't remember the other guy's quote. I'll come up with it probably as I'm driving home, and I'll be like, dang it.
Yeah, whatever. That one was good enough.
Right. All right, cool. So we talked a little bit about why crypto is the opportunity of the decade. Now, here's something else that's important, okay? This is from Charles Hoskinson, who is the founder of Cardano. He is the CEO of Cardano, right? Everyone knows what Cardano is. He says, over the next 10 years, there's going to be more improvements in financial policy from our market, meaning the crypto market, than the last 100 years of reserve banks. Woo! In the next 10 years, there's going to be more improvement on financial engineering, the building and construction of financial items, and the markets upon which they trade or which trade them than the last 100 years from Wall Street and England and Tokyo and all the other locations on the planet integrated.
Jeez.
In the next 10 years, there's going to be more motion of wealth 24 hours a day, 7 days a week on crypto rails than there will be through the Bank for International Settlements and through the repaired procedures and all these other things that are the essential staples of the current financial world. So that's from Charles Hoskinson, who was, by the way, one of the founders of Ethereum and then moved on to be the founder of Cardano. In other words, he is extremely bullish. He's extremely excited and extremely confident in the improvements that are planned to be made in the decentralized financial markets through cryptocurrency. To be fair, or to be clear, we're not talking about Dogecoins or Shiba Inu coins or made-up coins. We're talking about improvements to decentralized blockchain financial systems, that this will replace 100 years of financial markets.
Well, think about it. Everything, like the big, who's the Harvard, Clayton Christensen, right?
Right.
What's
Disruptor.
his disruption?
Yeah.
Like, we're seeing disruption pick up at a massive, like how long were taxis the thing, and then Uber comes along and pretty much takes them out.
That's right.
Airbnb comes along, huge disruption to hotels.
Yep.
There's this company here locally called Homey, who's pretty much disrupting. They're actually the number one real estate broker in Utah, in Salt Lake City.
Yeah.
So disruption is happening, and that's a company that started a few years ago, and now all of a sudden they're the number one broker.
Yeah.
Like, we're seeing disruption, and based on what we're seeing there, I really believe that we will see disruption of the way of the financial market and how we pay for things. I think we're not far away from there being pretty much no such thing as a physical cash. Like I think whether that's crypto or not, is up in the air.
Yeah,
I'm feeling confident about it, but I think at least there's not going to be, dollar bills. It's going to be all, Apple Pay, Venmo, those kind of things that will replace all physical currency.
Yeah, that's right. Well, and frankly, people who are not, people who kind of turn their nose up against the crypto market and who are entrenched in the traditional ways of finance. One of the things that they will like to say is that Bitcoin, it's just computer code. It's not anchored or tied to anything of value. The dollar, the U.S. dollar, is tied to gold in the Federal Reserve. So how can you say that the Bitcoin is valuable? It has any value at all? Well, that's a great point, except that it was Richard Nixon who initially signed a temporary departure from the U.S. dollar being connected to gold.
Yeah.
It was meant to be temporary, but it stayed on. And now, you know what?
It's useless paper that we trust in.
Right.
That's what it is.
The government at this point, like all these stimulus checks, the payments, the government's just printing money. Don't get me wrong. I love getting the stimulus check, but they're just printing more and more money, and it's not backed by any gold anymore. That is an illusion that has long since been in the past. Now, and so these folks are saying, well, the Bitcoin's not tied to anything of value. Well, what is value, right? Like, how do you?
No, it's trust.
It's trust.
Trust is what gives. So, if enough of us who are into crypto and those who will still are yet to join believe in it, then there is value.
Yeah. Yeah, absolutely.
And that's why NFTs, that's why, like I said earlier, Pokemon cards, baseball cards, stamps.
Right.
Why are stamps like, you make a lot of money on selling stamps that you could have bought from the post office a few years ago.
Right.
Yeah,
it's ridiculous.
Because somebody sees value in it. And it's just trust, and it's perceived value.
Yeah, it's nuts. So, at any rate, the fact is that yes, crypto market has not really hit its peak. We can see that in that graph where it's only at 1.5 trillion. There's plenty of growth to come. And these are some of the thought leaders here who are saying what's going to be happening in the next 10 years. So my point is, now is the time to jump into cryptocurrency if you want to accumulate wealth. Now, what about the crypto bear market? So right now, late June of 2021, everyone's losing their mind because Bitcoin just dropped from like 38,000 or 40,000 down to 28,000, I think, at its lowest point over last week, which means that every other altcoin or cryptocurrency or a token took a dive as well.
Yep.
Because once the Bitcoin goes down, everyone loses confidence in crypto, and so people start selling, and it's just a huge crash every time, or a dip at least. And so now, and honestly, since late May of 2021, and probably the last 45 days, the market has been sideways. Like it's not been going anywhere. If anything, it's been going down. And so
I get excited, man. I personally, when I see it go, Chainlink was at $50 and now it's at $15. I'm buying it. 50. I'm buying
Right.
more, dude.
It's a sale.
I'll scrounge up whatever money I can find and put more money in there.
Yeah. So it's a legitimate question. Okay. So we just made the point that cryptocurrency is the opportunity of the decade for those in the accumulation individual investment stage to make money. But the question is, well, what do we do when the market is tanking and is dipping, right? Well, you just mentioned buying, but there's some more things that is worthy of note. Okay, first of all, when there is a legitimate bear market, and I don't think Tyler or myself are qualified. We don't consider ourselves individually qualified to say yes, definitively we are entering into a bear market. Certainly, we are in bearish cycles, but I don't know that we're in a bear market. I think we're still in the bull market. A lot of the industry experts are saying we're in a bull market still, but that there is a bear market probably coming, but it's probably going to be mid 2022 before that hits. And frankly, we're probably going to have some bullish cycles. That's probably going to happen here around August, September, especially when things like smart contracts for Cardano gets released. Ethereum 2.0. Well, Ethereum starts doing the deflationary burning of tokens, and then Ethereum 2.0 comes out in early 2022. Also in the fall of 2021, Bitcoin is going to receive a very great technology upgrade through the Taproot investment. So that's going to happen in the fall. So crypto will probably skyrocket in the fall. That's just my guess. But the question though is, what happens when you are in a recession or in a bear market? What do people do? Well, here we are.
Well, and the interest rates are going to go up. I believe the Fed's announced in 2023, like they're going to have to start. Housing interest rates aren't going to stay as low as they've been.
Yeah.
Yeah. And I think that whenever things like that happen too, people start.
Yeah. Absolutely.
Gathering up their money and taking less risk, hoarding it.
Yeah. So when recession hits or when there's a bear market, what do people invest in or purchase? Well, according to Maslow's hierarchy of needs, we know that when times are rough and we are in a recession, people spend money on the lowest rungs of the hierarchy of needs, meaning food, water, essentials to maintain life, security, safety, toilet paper. Yeah, I mean, we saw that with the oncoming of the pandemic. Everyone was running to Costco and just draining that place of toilet paper. Kind of silly, but
hey, you couldn't get bottled water. You couldn't get. Yeah. I mean, there's not. It's like
that's
empty.
what people do when things get crazy, when things get bearish, when things get when we hit a recession. So those are the things that you want to have into your portfolio to be ready for when a bear market happens or when a recession hits. Crypto, by the way, at least I don't know of any crypto that provides the food, water, and warmth immediately to you and your family. So people aren't really going to be investing much into crypto during a recession. So, but let's talk about what that means. So, first of all, what investments perform well during recessions? Well, like we just said, any investment around needs, food, water, clothing, essentials. So, it's always good to have in your portfolio some companies or stocks that come from the industries that provide these basic needs. So that when all the rest of your stuff is tanking, at least that's doing well enough to keep your portfolio strong. The second thing is comfort. Recessions are stressful. Bear markets are stressful. If you look at what happened in the Depression and the recession of 2008, in the recession in the early 70s, things spiked, such as alcohol and cigarettes, cheap entertainment, meaning like TV and movies. In the Depression, one of the industries that flourished in the Depression was radio. People needed something to comfort themselves from the stress of the Depression. Radio was there to fill the need. If it wasn't for the Depression, John F. Kennedy probably would never have been president in the 60s. What I mean by that is that John F. Kennedy Sr. Invested heavily into Hollywood in the Depression. He already had made a few $1 million in the stock market prior to that, part of the Depression. When the Depression hit, he realized and was savvy enough to understand that people will want some type of entertainment. And so he bought up a bunch of like fledgling movie production houses, consolidated them, and made freaking millions. And that's how he established his incredible empire and, raised these incredible, successful children, one of them being John F. Kennedy Jr., who became president of the United States. But also Disney. Disney would not be a thing right now if it hadn't been for the Depression. Disney got its start during the Depression. People wanted to pay that 2 cents that they had to go watch Mickey do his thing. And so Disney really got a boon during the Depression. And so, comfort is cheap entertainment. That's always something to be invested in for your recessions. Now, what does that have to do with what we're talking about with cryptocurrency? Well, listen to this. This is from Coin Bureau. The only crypto assets that are projected to do well during bear markets and recessions are, quote, those cryptocurrencies or crypto technologies that power games, virtual worlds, and virtual economies. My point is that the metaverse will be or could be the primary crypto investment option during bear markets. So again, right now, a lot of people are losing their minds and think we're going into a bear market or that we're in a bearish cycle. But I'm telling you that, first of all, crypto is the thing, the opportunity for the decade. It is the option for us to accumulate wealth. But yet, when you're losing money, don't put all your money in cryptocurrency, in the coins or tokens. Put some into the metaverse. When I'm telling you, when the bear market actually does come, Upland is going to explode.
Yeah. Oh, and down times when people are feeling depressed, games are what, like, gaming's always been something. I come home from a stressful day at work. If I want to play a game, sometimes that can be something that takes my mind off things.
Yeah.
Like, people enjoy gaming as an escape, and I believe that's why entertainment was such a key point there, that people will still pay money for entertainment when money's tight.
That's right.
Even if it's not as much, I think we'll continue to see growth in Upland. Properties will still be selling because someone's going to be having fun. And we're talking properties that start out as $2 and sell for $4 or like, it's not an that is cheap or low cost entertainment if you
Right.
just want to get started and dabble in it.
Yeah,
You know?
absolutely. Yeah, so I think that's the last of my slide. But yeah, so the point there is, again, there's a couple points here. One is, I don't know that we're in a bear market. I'm not a financial advisor, and I'm not an expert in cryptocurrencies or crypto technologies. I'm an investor in these things. I tend to believe the majority of the crypto experts that are saying that it's not a bear market, but that one is coming. And so how do you prepare for that? Well, I would say that you're going to want to ensure that you have investments in your portfolio that tend to perform well during recessions. So number one, crypto technology is the opportunity of the decade for you to accumulate wealth. If you are in that age bracket in which you are still accumulating wealth, the crypto market is for us. All right, number one. Number two, when things start to dip, because it's highly volatile, ensure that you are investing in investments such as like Upland. That's going to be a way for you to maintain a balance in your portfolio, so that when things take a dive, you've got Upland to fall back on, to invest in, and you can make money.
Yeah, pretty much on that graph that showed all the different stocks, we saw that pretty much every 5 to 10 or less years there is a dip. There's always going to be a dip.
Right.
There's always a big rise and a dip, and we don't know if that's a year, 2 years, 3 years from now. Maybe it'll be longer. You don't know. But when it eventually does, why not have your money tied up in a game that you can actually enjoy and play, and still keep growing your investment by playing a fun, entertaining game in a virtual world that will be an escape? That's why I love the combination of gaming with investing. It's fun, and you can make money doing it.
Yeah, absolutely.
Join us.
Yeah, that's right. So that's my presentation. That's the point. Again, these are thoughts and things that I've put together after reading and watching and a few various investment experts, and I credited those at the beginning of the presentation. But the idea is, jump into the metaverse, man. Jump into the Upland, because this is going to be a way for you to have a good, solid, steady, but yet accumulating investment for you, even during bullish times or during bearish times. It'll work out for you.
Absolutely. Yeah. Thanks again for joining us on the 4th episode of the Upland Show. We're excited to bring much more content, and we look forward to seeing you next time.
And good luck in Cleveland tomorrow if you are already in Upland. All right. Thanks, everybody. Talk to you later.
Above that one. No, below that one. We can clip it.
Dude, you're